Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend, Mr. Dan Bird. How you doing, sir?
I'm doing great. Happy Sunday.
Happy Sunday, man. Thank you for doing this, folks. This is going to be an exciting episode. We are going to look at Netflix. Netflix had, I think, a 20 or 21% drop. It was one of the original FANG names. But Dan is going to show us that technical trading actually had some warning signs. Again, Dan's the PhD. I'm in preschool. I'm going to be learning with you side by side. But Dan, why don't you show your newsletter first? Because people need to get on this. It is free. And then I will just sit and watch because I'm gonna be amazed at what you have to show.
Okay. Can you see this here?
I can. Breakpointtrading@gmail.com. Look at that. I got it right again. Breakpoint Trading.
Just send me a note and I'll send you, it's free. So I'll just add you to the distribution list. I do this every week anyway, just to kind of see what's happening with the market. So I just put it into a format where I share it with everybody else if they're interested. These are some excerpts from this week's with a couple of cartoons to put in there. Like this one on the right, it's not really a crash, it's a market correction. It looks like a crash to me.
It looks like a crash to me.
And by the way, this one over here with the airplane says, Don't panic, folks. We've just about bottomed out. This is from March of 2001.
Oh, that was a very painful time for me. I remember.
Right. That's when that cartoon came out.
That's funny. Okay.
All right. So before I get to Netflix, I want to see if I can share my actual newsletter.
Okay.
Can you see this?
Yes.
All right, this is from the newsletter. I talked about the dead cat bounce on our last episode, and I actually have an example of what it looks like in my newsletter for this week.
Yep.
So that's what a dead cat bounce looks like, and this is what I think is going to happen next week.
Gotcha.
We are extremely oversold. I think we're going to get a big bounce next week, and everyone will think that it's over. That's called a dead cat bounce, where the cat bounces, but the cat is dead.
Gotcha.
Right? And then it'll get up to a particular area, which is typically the reversion to the mean. And then it will continue down again because we still have 2 more months of bad inflation data coming.
Oh, yeah, we've talked about that. Yeah, the base effect. Yep.
Right. And March is the first rate hike. So I think all of that's going to play into the market continuing down for a while.
Yep. Okay. Very cool. Thank you for that.
All right. So let's talk about Netflix.
Yeah.
It's very interesting. And what I'm going to do, I am actually going to do this in real time. Okay. Because a lot of times when you look at charts, it's really easy to look back and say, oh, you should have done this because look what happened.
Right.
You know, it's really easy. Hindsight's 20/20, right? So it's easy when you look at the chart and it's actually finished.
Right.
To say what you should have done. But what can you do in real time as these things are actually happening? So that's what I'm going to do. I'm going to step through Netflix in real time to show you what technical trading, where it showed some of the warning signs. And I'll talk about this, and my newsletter does this as well in a little bit more detail. But these are some things that I look for typically. And this is the whole thing about learning French. After a while, you don't have to think about it anymore. You just see these kinds of things on charts.
Awesome.
So the first thing, this right here is to the date of November 18th.
Okay.
So this is up until November 18th right here.
Yep.
Okay. So the market's going up. Netflix was doing great. Market's going up, going up. You can see that the moving averages are moving up with the faster ones on top. This is an eight-day moving average, the pink line.
Okay.
And the blue line is a 21-day. Now I use those to determine entries and exits. Okay. So you can see down here where the pink one crossed over above the blue one. Yep. And Netflix had this big candle right here. So that was a good entry point. Now, just for disclosure, I was not in Netflix. I am not in Netflix now. I was not in it when it crashed. Right. But this is what the chart was showing. So this was a good entry point right here. And it continued up from November all the way up here till, actually this is August, all the way up here till November. Okay. Now this candle right here, this is something that's called a shooting star. And we talked about candles on a previous episode, but they kind of give you the psychology of what happened during the day. In this particular case, the market or the Netflix opened here, it went up. You can see this little wick. Yeah, it went up all the way up to here, which was actually a high, 52-week high. And then it came all the way back down again and closed near the open. So it couldn't hold the breakout. That's called a failed breakout.
Okay.
And those kind of candles, which is called a shooting star, are very reliable at a top of identifying a change in direction. All right. That's just something that you learn over time. Start to see these. A lot of times when I see that right there, I'll just sell, especially at the next candle the next day, it was starting down. So it was a confirmation.
Okay.
So that was the first signal. So that's number one. We also had negative divergence. So as Netflix was moving up and making a high, the momentum oscillator was going down and making a low. So it's losing momentum. So all of the traders that are pushing it up, there are fewer and fewer traders pushing it up. So it's losing momentum. It's losing steam.
And this was
also
on
down
November
here.
18th.
This is November 18th. Also, and I love divergences. They don't happen all that often, but they are leading indicators and they're very powerful.
Okay.
So this negative divergence would have been the first warning sign. There's also one down here on the stochastics. So that's November 18th. So let's move forward a few days, about a week.
Okay.
And see what happened next. So here's the candle I just showed you.
Yep.
So now Netflix is moving along. All of a sudden, this 8-day, the pink line is now below the 21-day.
Oh, it crossed. Okay.
That's point number 2. So that's my exit. That's where I would exit. So I would enter over here when the pink line crossed above, and I would exit right here when the pink line crossed.
So just again, to help people learn French in our analogy, when the 8-day, meaning the short duration, passes the long duration, that is a sign that momentum is turning.
Correct. That's right.
All right.
Yep. And the next one down here that's kind of a reddish color is the 50-day. The 50-day is what most of the big institutions track. And that's what a lot of the algorithms will trigger.
Oh,
so
okay.
So when it closes below the 50-day, which it actually did on the same day that the pink line went below and that's point number 3 here. It actually closed on the same day that this number 2 happened. It closed below the 50-day. That's what all the big institutions look at, and that's what the algorithms look at.
Yeah, the algos, as they say. Yeah.
Right. So when the algos see that at that close, they start triggering sell orders.
And what date was this again?
That was November 30th.
November 30th. Okay.
All right.
Yep.
Now, some of the other things you could look at, although they haven't really triggered yet, this green one right here, this is Netflix in comparison or relative to, this is a relative strength to the rest of the market.
Okay.
All 9,000 stocks in the whole market. Netflix is right on the line, about to start to underperform.
Wow. Okay.
The next one down, the blue one, is Netflix compared to its own industry group.
Got it.
So how is it doing against its industry group? We talked about William O'Neill and the fact that the industry groups are really important for IBD back in our book section. This right here helps you understand how it's doing with its industry group. So far, it's been strong. You can see all the way back here when we would have got in over here, it started trading above its industry group. Now it's getting close, but it hasn't crossed yet.
Okay.
And then the last one here is the accumulation distribution. The accumulation distribution line helps you understand whether institutions are accumulating or buying shares, or if they are distributing, meaning selling shares. And when the big elephants dance, the mice get squashed, right? The mice are us retail traders. And when the institutions are distributing, they are distributing to us, to retail people.
Got it.
Retail traders that think Netflix is going to go to the moon. It's been going up forever and it's keep going up and never stop, right?
I was always one of those people. If it was winning, I was, right. You're speaking my experience. So
accumulation distribution is an important thing to watch. It just crossed over here as well. So those are all warning signs. So now we have 3 warning signs. Now this one right here, where I would have gotten out, where the 8 crosses the 21, and the same data confirmed down here by closing below the 50.
Yeah.
that right there was about $640.
Okay.
All right, so that would have been the exit.
Sure.
Now, for those that saw Netflix on Friday, know that it closed below 400.
Oh,
All right.
ouch.
So technical trading would have got you out right up here. All right, but let's continue now a couple more weeks. All right, so now the next day after it closed below the 50, you can see it had a big drop. There's a good example of the algorithms kicking in.
Yeah, that's what I would have guessed that was, is the machines took over. Yeah.
You can see the accumulation distribution is dropping rapidly.
Ooh, look at that. Yeah.
And now you can see the relative strength Netflix for the whole market is below, and relative strength in its industry is just starting to drop below that line. All right, so these are all warning signs, but the warning signs started back here.
Yeah.
All right, so let's move forward a couple more weeks. Now we see Netflix has dropped way down here. See the pink line's way down.
Wow.
And remember I talked about reversion to the mean before?
Yep.
So at some point it gets oversold, and the whole market is oversold right now. I think it's going to have a reversion to the mean soon, like next week.
Yeah.
So it had a reversion to the mean back up here to the 2021 day.
Right.
But it couldn't hold it. It failed.
Got rejected.
So
Yeah.
reversion to the mean, and it failed. So that was your last warning. At that point, the die was cast.
And what
at
date
that
was this?
Point, this was January 3rd.
Wow.
So
Okay.
at that point, so now you're at about $600. Remember, Netflix closed Friday below 400. All right, but that's your last warning sign. That's telling you don't stay in this thing.
Got it.
All right, you had all these other warning signs. So none of these things happen by surprise. So let's move forward now. Here's an example of reversion to the mean. I showed this for the S&P, but this is with the ATR, 3x ATRs. So that's a good example of reversion to the mean. It goes up here to the middle, and now it's starting back down again.
Got rejected.
So now where do we end? There's Netflix. That's what happened Friday.
It's almost not on the screen.
Right.
Wow.
And you can see all of the warning signs that it had before that happened. So none of these things, whenever you have a big dump like that, the 1987 flash crash that everyone thought was a surprise, it had the same kind of warning signs. The 2008 crash, it had the same kind of warning signs before any of that started happening.
Wow.
Even the crash in 2001 had all the same kind of warning signs before the actual crash actually occurred. So if you understand French, start reading the charts and understand what's going on, that can really save you. And this is why I'm in cash right now.
Yeah, folks. And again, if you don't get the analogy of being in French, go back and watch Dan's playlist. It's kind of how we introduce this conversation. Dan teaching me a new language, which is charts and technical trading. I am curious, that little circle you have on this screen is, did you call that a hammer or something the other day?
Oh, I'm actually expecting a hammer on the market, the general market. Let me bring the newsletter back up because it's actually in the newsletter.
Oh, okay, cool.
Nice to know that you're reading it though.
I am.
So here's what I said. We'll still have 2 more months of bad inflation data. First Fed rate hike is in March. If we do get a rally, it is a chance to get out of losing positions or a short-term buying opportunity, but don't be complacent because I don't think the correction is over yet, even with a rally next week. What I expect to see is initial selling on Monday and a powerful snapback rally, creating a hammer candle reversal. Let's see what happens. And this is an example of a hammer candle. So this is what I'm expecting to see. So this is, this isn't the S&P chart. This is, I don't know what chart this is, but this had a big, huge drop, just like we've had. It had a huge drop on this one day, all the way down here. And then on the same day, came roaring all the way back.
Got it.
Right. That's a hammer.
Oh, okay. Got it.
That's what I'm expecting to see.
Yeah, Monday, Tuesday.
That's going to be a short-term rally. And then I don't think it's going to hold. I think it's going to continue even lower, like this.
Yeah, I gotcha. Very, very cool. That was so fun to see in real time, trying to go and watch the warning signs, Dan. I appreciate it. I'm going to have to go back and watch this one again. Again, the first warning sign was on November 18th, validated on the 30th. And then you had one more chance in early January. So it's pretty crazy. So Dan, if somebody wanted to get your newsletter, how would they do that?
Let me go back to this right here.
There you go.
Just send me a note, breakpointtrading@gmail.com, and
Yep.
I'll add you to the distribution list.
And that comes out, generally speaking, either Saturday or Sunday, right?
Saturday or Sunday. Over the weekend is usually when I take a look at the market, see what it's doing.
Very cool. And I'm going to be a cash this week. We will see what happens during the week. It's going to be fun. Thanks, buddy.
All right, you bet. Have a good weekend.
Yep.